Tesla seems insanely cheap at wherever it is now, 1040. The catalysts are more robust than I've ever seen. So it's a doubling of capacity with Austin and Berlin. It's analysts taking their price targets and their estimates up after fourth quarter earnings. I thought they would do it after volumes. Only about half of them did. It's the $8,000 EV credit, which I think will come back in March, April. The product catalyst, which Elon will talk about. So basically Cybertruck, Model Y going to Europe, and compact. Semi will be there, but it's going to be small. And 4680 and FSD, I would look at those as being almost like free options you get. I look at this guy's brilliant. He's executed. He's single-handedly led the whole automobile industry into EVs, and he's delivered. And so I love the stock. It's my favorite position. We feel really confident about Tesla. We have a $1,600 price target versus $1,040 price, so it's 50% upside in 6 to 12 months. It's our number one position, and I feel really good about where they are today versus even where they were a year ago. So it'll remain our largest position.
In this video, I've put together highlights from a recent video featuring Tesla bull Gary Black, co-founder and managing partner at the Future Fund, who discusses his $1,600 price target for Tesla stock, his method for valuing Tesla, aka how he arrives at this $1,600 price target. Gary also shares his 2022 catalyst for Tesla stock, plus his earnings and delivery estimates all the way out to 2025 and more. I'll keep my comments to a minimum here so the video doesn't drag on, but I thought this was a super insightful discussion from one of Tesla's smartest bulls. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support.
So normally Tesla goes up between one day after volumes, so the day after volumes come out, and the day before earnings goes up 19%. And so far, I think we've got about, based on where Tesla is right now, we're down about 10%. The fourth quarter volumes came in at 308.6. The street was at 265. So a huge, huge monster beat in terms of volumes. Again, I look back over the last 2 years, so 8 quarters, there was never a beat that much by surprise. You don't see beats that big with mega cap type names. And so when you try to figure out what is that worth, 308 versus 265, that's about a 43,000 beat. And you could, again, do the math, multiply that times the 50,000 or so average selling price, 29% gross margin, 1 minus 15% tax rate divided by the number of shares. It's about 40 cents a share that the street should be raising their numbers by. So the street was at $1.97. Today they're at 218. So they've only taken about 20 cents of the 40 cents that mathematically they should be able to figure out in a minute. It should go up. My numbers for the fourth quarter, by the way, are 255. So right now we got 255, my numbers, versus 218 the street. Is that something to get excited about? Probably not, because a lot of analysts will hold back. They'll hold back for many reasons, but in this case, it's not very few. Less than half have buys on Tesla. Most of them have holds and sells. And so a lot of them will just hold back until earnings come out and then just change their models, update their models based on where EPS comes in. And I looked at Bloomberg this morning. Only about half of the analysts have actually updated their numbers since the big delivery beat on Monday.
So let's just skip over the fact that literally half the analysts on Wall Street aren't recommending investors buy Tesla stock. I just want to focus on the fact that about half of the analysts haven't updated their earnings estimates for Q4 2021, despite material information that will massively and positively affect earnings. So why might that be? Well, a few ideas that come to mind. It is possible some of these stock analysts are stock whores. They're covering so many different companies simultaneously that they can't keep up with everything, in which case I would say, in order to do your job effectively, maybe stop covering 420,000 different stocks, you idiot. However, the more likely scenario for most of these analysts, in my opinion, is that they don't know what the they're doing, and or they have no confidence whatsoever in their predictions, in which case they're basically gigantic pussies. They're not willing to put their balls on the line on the chopping block and make some predictions. They'd rather wait and see, in which case I would suggest, why don't you become a CNBC reporter and just tell us what's already happened rather than looking forward.
The bigger number is going to be 2022, because once, fourth quarter I think is kind of baked in. Everybody knows it's going to be a decent sized number. The big number for 2022, we're at 1.6 million in volume for 2022. The street's at 1.35. That's a huge disparity. That's 250,000. And again, if you try to figure out what is that worth, do the same math, multiply the selling price times margins, 1 minus tax rate divided by fully diluted shares, it's worth about $2.50. Once we get the numbers for fourth quarter, and once Elon gives the product roadmap and talks about when Cybertruck's coming, when Austin and Berlin are coming on, hopefully but before earnings come out, then I think the numbers will probably go higher. If you look at go back 8 quarters, go back 2 years, and figure out what is the average increase between the day after volumes come out. Okay, so in this case, it'd be after the big move on volumes to the day before earnings. That number going back the last 7 quarters, because you can't include fourth quarter because it hasn't happened yet, that number is about 19%. So normally Tesla goes up between 1 day after volumes, so the day after volumes come out, and the day before earnings goes up 19%. And so far, I think we've got about, based on where Tesla is right now, we're down about 10%. If I measured maybe 12% since the day after the volumes came out. Those are the catalysts. It's Berlin and Austin. The Cybertruck, it's compact. It's the 4680 cells being put into place, because they reduce cost. Here's my outlook going forward. And this is a complicated chart, but just let me take you through it, because if you understand this chart, you understand how we think about Tesla. So we're looking for 1,000,006 units. That's the deliveries number. It's about 1, 2, 3, 4, 5, 6 columns over, third line down for this year. And again, the street's at 1,353, give it. And I get 1.6 because if you look at the fourth quarter numbers and annualize them, you're at 122. There's an expansion in China going on that's going to add about 250 to 300,000 units capacity, and it'll supposed to be done in April. So let's just say 2/3 of the year. That's worth about 150 more. And then Berlin and Austin should also give us about 150 for 2022. And one of the things when we were with management a few weeks ago, we talked about, they said it's not a typical ramp up because you're basically putting in products that they already know how to manufacture, Model Y, in both Berlin and Austin. And they've got a lot of experience in building it in Shanghai. So even if we use the Shanghai experience, which was 150 the first year, and that was Model 3, at 150 for Berlin, 150 for Austin, 150 for the China expansion, you're at like 165, right? So I feel pretty good about my numbers for 2022. 1.6 translates to about 1280 in earnings. The street right now is at about 910.
Just quickly want to talk about Gary's estimates, 1.6 million vehicles delivered in 2022 and the reasoning behind it, which equates to almost $13 in earnings per share. My base case for Tesla stock, which is available to Patreon supporters at the investor support level and above, hit the card in the corner or the link in the pinned comment to join, is almost identical. I've got 1.601 million units, round it down, 1.6 million units and $13 of earnings per share. Gary and I are on the exact same page here. Now, in my opinion, my base case for Tesla stock is quite conservative. I think there's a lot of room for upside. I think 1.6 million is basically a done deal. Could be as high as 1.7, 1.8 million units. And the geniuses on Wall Street, they're absolutely nowhere near this conservative number for deliveries or for Tesla's earnings per share. By the end of the year, they'll have figured it out. Between now and then, massive opportunity in Tesla stock, in my opinion.
I'm assuming that Tesla EV share, just stays right where it is. And so the bears will argue, well, that's crazy. Look at all the competition that's coming. We've been looking for the competition for 5 years. And I would argue back, but look at the TAM expansion you get by bringing Model Y to Europe. That's new. And you'll be able to bring the price down because you're manufacturing in Europe. You don't have to pay an import tax. You don't have to pay for shipping. And you're also going to have a Cybertruck over this period. And you're also going to have a Tesla Compact over this period. And so I think if Tesla can hold its share, that's the exact same model you saw with iPhone. iPhone got a lot of adoption with its smartphone. It didn't really gain that much share, but overall, it got incredible volume growth. So if you look at between the 936 for 2021 going to 5.2 million by 2025, that's all EV adoption. And that translates into earnings going from $6.80 in 2021 to about $45.
So in 2025, my estimates for Tesla production are pretty close to where Gary's at in the base case, a little bit higher in the bull. But there is a major difference in our earnings per share numbers. He's at $45 and I'm at $59 in my base case, 30% higher than where Gary's at. And it's actually very easy to account for the massive difference in our earnings estimates despite being very close in terms of deliveries in 2025. Robo-taxis. As far as I'm aware, Gary's model doesn't include any robo-taxi revenue whatsoever. This is just based on automotive sales, whereas I'm including robo-taxi revenue as well. In my Tesla valuation model, the very first robo-taxi fares take place in 2024, but a tiny number. 2025 is where things really start to have an actual impact on Tesla's financials.
If you look at that solid black line, For 2020, EV adoption was about 4.5 to 5%. And it's ending this year at 11.4%. And it's being driven by China. China, because you've got so much EV demand and so much EV supply, that number's gone through the roof. Europe has gone through the roof. You can see the US is still about 4%. And if you get the Build Back Better plan, which I didn't talk about, but I do think that will come back in a smaller form, that number should really rise. And this is EV volumes forecast. They're looking for 2021 to wind up at 7.4% in EV adoption. I'm using 6, and I'm using 10.5 for all of 22. So this is where, when people want to talk about price targets, if that number goes up to 12 or 13, my price target will be going up again.
I just quickly want to talk about EV adoption. If you're looking at the graphic on screen right now, have you ever seen a more perfect example of exponential growth? The reason that I've been talking about this for the past couple of years on this channel is because human beings do not intuitively understand exponential growth. Just 5 years ago, in 2017, electric vehicle sales made up less than 1% of the global vehicle market. It's almost understandable that the morons running legacy automotive companies didn't think electric vehicles were the future, didn't think there was any hurry, didn't invest, and are now likely to go bankrupt because they didn't understand what was happening and they didn't take the time to get around their intuition and actually understand what disruptive innovation leads to, aka exponential, not linear adoption. In the early stages, exponential growth looks deceptively similar to linear growth, and this is where many people have made colossal errors of judgment. If we look on screen, 2014 electric vehicle sales make up about a quarter of new vehicle sales. 2015, they're not even 0.5%. 2016, a little over 0.5%. And 2017, less than 1%. Doesn't really look like much is going on here, right? But look what's happened since. 2017, less than 1%. 2019, just over 2%. 2020, over 3%. And 2021, now looking like 7.5%.
So we raised our price target from 1,400 to 1,600. We raised our 22 EPS from 12 to 12.80, our 23 EPS from 18.80 to 20, and our 25 EPS from 40 to 45. And what is driving this? It's two things. It's the capacity additions. So it's Austin and Berlin and any other plants. And we're going to have to see more capacity added, China expansion. We believe UK, India are also on are next. We assume that the volumes of 1.6 grow to 5.2 by 2025. And if we can get that, we can get $45 in earnings. The trick with price targets, you got to pick a valuation in 2025. And so we use a multiple of 50 times. Right now, as you know, it's over 100 on 22 earnings. We use 50 times because looking forward from 25 on, we're expecting about 20% long-term growth, which may sound low to people, but I want to be conservative.
Just for the record, I personally think that mid-decade 2025, Tesla's still going to be growing around 50% per annum, maybe more, not even close to Gary's conservative 20%. This will have a major effect on the multiple and therefore Tesla's stock price, so we'll talk more about this in a moment.
If you look at, again, more stable, lower growth companies like Microsoft, Apple, Amazon, they traded about 2.5 times PEG. So if I put 2.5 times 20, I get a 50 multiple. 50 times 45 is 2250. We use a discount rate of 11.6%. So we're using an equity discount rate for earnings. But we take 45 times 50, that's 2250. We take 11.6%, discounted back for 3 years. That's 2025, discounted back 3 years. And we get 1,600. And that's the way our 1,600 price target is derived.
So there you have it. That's how Gary Black comes up with his $1,600 per share price target for Tesla stock. It's based on 2025 earnings, discounted back, and there's a 50 times multiple applied to those earnings. Just for the record, I've applied the same formula to my own EPS estimates for Tesla in 2025, straight out of my Tesla valuation model. And in my base case, that would mean that my price target for Tesla stock today should be $2,037 per share. Funnily enough, that number is quite close to my weighted average price target for Tesla stock in 2022, which is currently $1,930. If you guys and girls want access to all of my Tesla price targets, the bear case, the base case, and the bull case, sign up to Patreon with your card in the corner or the link in the pinned comment. My 10-year Tesla stock price targets are available to all Patreon supporters at all levels. And if you're wondering, my weighted average price target for Tesla stock is simply derived by factoring in the probabilities for my bear case, base case, and bull case price targets.
The reason we went from 14 to 16 as a price target is because we took EV adoption up, we took gross margins up, and we took average selling price up because, and this is another thing with Build Back Better, as other people know, when the EV credit goes in place, Tesla will take price increases in front of that. So let's summarize. One, Tesla seems insanely cheap at wherever it is now, 1040, versus our price target of 1600. And the 1600 is based on a 2% 10-year treasury. So we're at 1.8, so we have some room. The catalysts are more robust than I've ever seen. So it's a doubling of capacity with Austin and Berlin. It's analysts taking their price targets and their estimates up after fourth quarter earnings. I thought they would do it after volumes. Only about half of them did. It's the $8,000 EV credit, which I think will come back in March, April. It's investment grade credit. S&P is one level below investment grade. The bonds trade as if they're investment grade already. If you look at fixed charge coverage, you look at debt to capital, they're investment grade numbers already. The product catalyst, which Elon will talk about, so basically Cybertruck, Model Y going to Europe, and compact. Semi will be there, but it's going to be small. And 4680 and FSD, I would look at those as being almost like free options you get. Last thing I'd say is if you think we've added some value, remember our ticker is FFND. We think our fund is pretty cheap right now. If you believe that Tesla is poised to move 50% higher in the next 6 to 12 months, it's our largest position. It'll be our largest position unless something crazy comes up on the conference call. But it should continue to do extremely well as Tesla goes back to 12, 14, 1600.
Gary also did a quick Tesla Q&A, so let's watch those highlights now.
But as we've seen for a while now, the street continues to be pretty negative on Tesla. You've got almost 50 people covering Tesla, and only 21 of them are buys. You've been on the street, on the buy side and the sell side. And there's a lot of interest in why is it? Why is such controversy around Tesla? Because they have really, quite frankly, delivered versus any other large cap stock, whether it's semiconductors or on production and everything. So chat about that a little bit and what is going to change or what could change going forward to get people more bullish on the sell side.
Okay, it's a great question. One is valuation. The average long-only portfolio manager isn't used to paying 100 times earnings for anything. And I actually had this discussion with somebody this morning. They can't believe our $1,600 price target or our forecast of 50% volume growth. Because if you look in the mega cap space, mega cap being defined as above 200 billion in market cap, so Apple, Amazon, Microsoft, Facebook, NVIDIA, nobody's growing units, which is deliveries in car language, but units in other language at 50%. But again, if you're going to grow at 50%, and we're at the early stage of EV adoption, you saw the chart. We're 6% globally, going to 100, maybe going to 80. We're at the very early beginning of the S curve of EV adoption. So one is just valuation. It's hard to get long-only managers to pay 100 times for anything because they don't pay that for Amazon, Apple, Microsoft, Facebook, or NVIDIA, quite frankly. Second, I think is just, and I don't want to sound negative because I'm not, it's our largest position, but I think there's a distrust of Elon. And I can't put my finger on what it is. It's not really, that he was smoking marijuana on Joe Rogan. Most PMs don't care about that. But I think there's no strong number two. So there's key man risk. And that's not true of the other big mega caps. I think the Bitcoin purchase, I know people don't want to hear me talk about it, but it's not normal. You don't see big cap companies take corporate cash and invest in something as well called risky as Bitcoin because people could do that themselves. So that's another factor. I think if he would point a strong number two with operating experience or great marketing experience, I think people would feel more comfortable. I think the way he sold stock in November, December is definitely different than what you've seen in other companies where they would have just called up Goldman and Morgan Stanley, got it done in a couple of days, but for whatever reason, you dragged it out for 2 months. And I think people are still perplexed about that. On the other hand, I look at this guy's brilliant. He's executed. He's single-handedly led the whole automobile industry into EVs, and he's delivered. And so I love the stock. It's my favorite position, in spite of the fact that there's no strong number two. And if Elon would do some of these more conventional things, which I know he doesn't want to do, I think you'd get a lot more institutional ownership. I think that not having a strong number two is a big deal in talking to people, because that is not true, again, of the other mega caps.
Competition has been obviously a big issue over the years, and it's kind of fading in some of the areas. But in one area that continues to come up is in trucks. F-150, Cybertruck. Looks like Ford's going to be, and GM are going to be ahead of the Cybertruck. So talk a little bit about that. Should we worry about it? What do you think about Cybertruck? And what do you think about some of the offerings that are out there from some of the competitors?
Well, people have talked about competition forever, and they talked about it when we just had Model S and they brought up Model 3. I remember when Model Y got launched. The bears were convinced it would just be 100% cannibalization of Model 3. And the thing that's nice about Cybertruck is there will be no cannibalization. It's a totally different animal than an SUV. It's a very different animal than Model 3 or Model Y, which is 90% of the volume. So I think once it's launched, we don't know how many pre-orders, but let's just assume it's 1 million. And let's assume Austin, when it's up and running, they'll have 250,000 of capacity. So, I've modeled in, after 2023 or 2023 on, I really haven't modeled anything for 2022, up to 250,000 Cybertrucks a year. And these are the highest margin vehicles in the automotive business. And so I do think because it's a very shockingly different vehicle, because it's got the Tesla brand on it, it'll sell like a hotcake, and people will probably be able to buy them and then flip them 6 months later, because the price is going to start right now. The list price is 39, but I think it'll start about 49. And I think, it's going to be a huge profit contributor to Tesla from day one. And then let me just talk about competition, because, my professional career has been, I don't say all over the place, but I've done a lot of different things. I actually started as a brand manager. People don't know this at Johnson & Johnson on the Tylenol business. So I think I know a fair bit about marketing effectiveness, how to calculate ROI on marketing, and a lot about competition. Competition is doing what Nokia, Motorola, BlackBerry tried to do when Apple came out. They're just copying. They're doing exactly what Tesla's doing. And what they use the term brand taint. I listened to Mary Barra talk the other day. She didn't mention brand taint once to even overcome it. And I think they're fooling themselves, because when you take a Silverado brand or a Cadillac brand or even a Hummer brand and you slap it onto an EV, the consumer shakes their head and say, I don't get that. This is a gas guzzler. And how do you suddenly expect me to believe that it's really good at making EVs? Where Tesla is 100% EVs, Rivian's 100% EVs, Lucid's 100% EVs. But you take these brand names that are gas guzzlers and slap them on, and say, okay, we're now going to be an EV player. The consumer doesn't believe you. And that's why I think GM only delivered 26. I mean, they're going to say that they only delivered 26 because they have, supply constraints. But I really think even if they didn't have supply constraints, you would not see them deliver because of brand taint. And the fact that Mary Barra, who's not an engineer, she's not a marketing person either, she's an administrative person, didn't even address it, struck me as really odd. Because to me, the number one reason that you're not going to get that much competition from these guys, and I call it kabuki theater, is because of the brand taint issue. We feel really confident about Tesla. We have a $1,600 price target versus $1,040 price, so it's 50% upside in 6 to 12 months. It's our number one position, and I feel really good about where they are today versus even where they were a year ago. So it'll remain our largest position.
Hope you guys and girls have found this video as insightful as I have. I have a great deal of respect for Gary. We see eye to eye on most, but not all things relating to Tesla. And it was fascinating to hear his estimates for Tesla earnings and deliveries out to 2025, how he values the company, and how his $1,600 price target was derived. And I'm extremely confident Gary's estimates for where Tesla is at will be far closer to the mark than the Wall Street consensus. Just out of interest, let me know in the comments below if anyone watching owns or is considering investing in Gary's Future Fund ETF, ticker FFND. Let me know in the comments below. See you guys in the next video. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel, and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.